Welcome back to Iraqi Dinar Alert, your go-to source for real no-hype analysis. Today, we're re-tackling a massive headline that is flooding the internet. Dinar and Dong contract rates go live. Massive RV shocks markets. These claims are everywhere. YouTube forums, social media creating a huge buzz and a lot of confusion. So, let's cut through the noise and get to the truth. What are these contract rates? And has a revaluation actually happened? Let's break it down. First off, what are these so-called contract rates? You hear this term thrown around, suggesting there are special, pre-negotiated exchange rates about to be released to the public. But here's the reality check. Contract rate is not an official term used in the global foreign exchange market. Central banks and legitimate financial institutions don't operate this way. In the real world, currency values are set by central banks, market supply and demand, or managed floats nod by secret go-live announcements for retail currency holders. As of right now, there is absolutely no public evidence that any special contract rates for the dinar or the dong have been released. Now, let's talk about the revaluation, or RV narrative. An RV is an official, upward adjustment of a currency's value by its central bank. For this to happen, it needs to be publicly announced, appear in official financial systems, and be reflected on global forex markets. These events are rare, transparent, and very public. To date, there has been no verified announcement from the Central Bank of Iraq or the State Bank of Vietnam confirming any kind of sudden massive revaluation. The claims you're seeing online are just that, claims, not facts. Let's look at the Iraqi dinar. Its value is managed by the Central Bank of Iraq and is heavily influenced by oil revenues and national monetary policy, BS. Iraq is making strides with banking reforms and moving toward a digital economy, which is fantastic news. But these positive steps are not the same as a revaluation. A real RV would be a deliberate policy decision, not something sparked by online rumors. The dinar remains stable and controlled, with no sudden appreciation in sight. Similarly, let's turn to the Vietnamese Dong. Vietnam's economy is a powerhouse, driven by manufacturing and exports. Its currency has managed to support this growth. A sudden sharp increase in the dong's value would actually hurt their export-driven economy by making their goods more expensive. A massive RV goes directly against Vietnam's long-term economic strategy. The government wants stability to remain competitive, not a currency shock. So, why do these contract rate stories go viral? It's simple. First, the emotional impact. The promise of instant wealth is a powerful hook, especially when times are tough. Second, the complexity of forex markets. Most people don't follow central banking policies, which makes it easy for sensational, but false narratives to take root. And finally, let's be honest, content monetization. Dramatic headlines get clicks and views, which means ad revenue for the creators, whether the information is true or not. So, how do currency rates actually change? It happens gradually through policy actions or through clearly announced central bank decisions. Banks follow official market pricing. There are no secret hidden rates for the general public. If a true RV were to happen, you'd see it instantly on Bloomberg, Reuters, and every major financial news outlet, not in a fringe online forum. Despite the headlines, global markets are not shocked. There are no unusual spikes or activity related to the dinar or dong. So, if you're holding these currencies, what should you do? Stick to official sources. Monitor announcements from the central banks of Iraq and Vietnam. Follow reputable financial news. Understand that currency appreciation is a slow, policy-driven process. And please, be cautious of anyone promising exclusive rates, guaranteed profits, or giving you specific dates for an RV. Phrases like insider rates or banks are sending secret notifications are major red flags. The final reality check is this. No verified contract rates have gone live. No official revaluation has been announced. And central banks, not online rumors, control currency values. The claims you're seeing are not supported by any financial data. The best approach is patience, education, and a healthy dose of skepticism. Thanks for tuning in. Remember to rely on facts, not hype. Be sure to like, subscribe, and hit that notification bell so you don't miss our next update. Today, we're diving into part 2, focusing on a term you've definitely seen online, contract rates. specifically for the Iraqi Dinar and the Vietnamese Dong. Why does this story keep popping up, and what's the real deal behind it? Let's get into it. Trades contract rates is a superstar in online forums and social media groups. Every few months, like clockwork, headlines explode, claiming these special rates are live. The banks are secretly preparing to exchange currencies at massive values, or that insiders are about to cash in. But here's the hard truth. Despite years of these claims, not a single piece of verifiable evidence has ever surfaced to prove that retail contract rates exist for the dinar or dong. So, where does this myth come from, and why is it so misleading? First, let's look at what people think contract rates are. The online stories describe them as special, pre-negotiated exchange rates, available only to select groups or banks. They're often portrayed as secret, higher than market rates that you can get right before a public revaluation, or RV. It sounds exciting, right? A secret door to wealth. The problem is, this picture doesn't match how legitimate, global currency systems actually work. In the real world of finance, exchange rates are public information. They're standardized. When a country's currency changes its value, the new rate is published openly for everyone to see. Every authorized bank in the world follows that same rate, and global forex systems update instantly. There are no secret back-alley deals or private rates for retail customers like you and me. Now, some of the confusion comes from a real financial tool called a forward contract. Large corporations and financial institutions use these to manage risk. A forward contract lets them lock in an exchange rate for a future transaction, which helps them plan for international trade and protect against currency fluctuations. And this is a huge but. These contracts are based on current market expectations and are used for hedging. They don't create new secret values for a currency, and they certainly don't apply to individuals holding physical banknotes. Promoters online have twisted this concept, rebranding it as a contract rate RV, which is just financially incorrect. Think about it from a bank's perspective. Banks operate under incredibly strict regulations, including anti-money laundering laws and transparent reporting requirements. If a major bank started offering secret off-market exchange rates to a select few, it would be a massive violation of financial law. It would create chaos in the forex markets and expose the bank to severe legal and financial penalties. SYUV never seen a credible statement from any major bank confirming these supposed contract rates. They simply can't and won't do it. So who actually controls a currency's value? Only one entity, the country's central bank. For the Iraqi dinar, that's the Central Bank of Iraq. For the Vietnamese dong, it's the State Bank of Vietnam. If a revaluation were to happen, it would be announced publicly by them. It would be on their official websites, in press releases, and reported instantly by global news outlets like Reuters and Bloomberg. There would be absolutely no need for secret contract rates. So why does this myth refuse to die? It really comes down to a few key things. Hope and emotion play a huge role. People who have held these currencies for years want to believe that a big payday is just around the corner. When you hear the same claim over and over, it starts to feel true. Even with no proof, that's a psychological principle called the repetition effect. And let's be honest, these contract rate headlines generate a ton of clicks, views, and ad revenue for the people pushing them. Watch out for the classic red flags. Claims like banks will notify you privately, only certain people qualify. You'll need to sign an NDA, or the classic, it's happening in the next 72 hours. These are all hallmarks of misinformation, not legitimate finance. A real currency change is public and transparent. There are no secret phases. The truth about the IQD and VND is that their value will be determined by economic fundamentals, and any changes will be announced openly by their central banks. Ignore the hype. Follow official sources. The contract rate myth survives on emotion, not facts. See you in the next video. Have you ever wondered what really happens when a bank exchanges your money? Forget the rumors about secret rates, VIP windows, or special early notifications. The truth is, currency exchange is one of the most transparent and regulated processes in the world. Let's break down how it actually works. First things first, banks don't just invent exchange rates. The rates you see are determined by central banks, like the Central Bank of Iraq for the dinar, or the State Bank of Vietnam for the Dong, and the massive global forex market. Commercial banks simply follow the official numbers that are published for everyone to see. So, what does a central bank do? They're the guardians of a country's currency. They manage inflation, control the money supply, and work to keep the exchange rates stable. If a central bank decides to change a currency's value, it's not a secret. It's a major public announcement. The new rate is officially declared, and all banking systems are updated simultaneously. There's no backroom deal or early access for a select few. Now, let's walk through what happens when you go to exchange money at your local bank. Step 1. The official rate is published by the central bank. Step 2. Your bank's computer systems automatically updates to this new rate. Step 3. The bank adds a small margin, known as a spread, plus any service fees. This is how they make a profit. And Step 4. You exchange your currency at the final rate displayed on the screen. It's the same process for every single customer, every single time. No negotiation, no special treatment. But what about big institutional clients, the ones moving millions of dollars? Surely, they get a better deal, right? Well, yes and no. They might get a slightly better spread because they're trading in huge volumes. But the rate they get is still based on the exact same official value as everyone else. They don't get access to a different secret currency value. Why couldn't banks just offer a friend a special rate, or give a heads up about a big change? It's simple. It's illegal. Banks operate under strict rules like anti-money laundering and know your customer regulations. If a bank offered private rates or early access, they would face enormous fines, risk losing their license, and cause chaos in the financial markets. So, if a real major currency revaluation and RV were to happen, how would you know? It wouldn't be through a secret email or a cryptic online post. It would be front-page news. The central bank would make a formal announcement. The new official rates would appear on every financial news network and banking platform across the globe almost instantly. Have you ever wondered what would actually happen if a currency like the Iraqi Dinar or Vietnamese Dong suddenly revalued? We've all heard the stories: secret bank appointments, overnight millionaires, and hidden exchange windows. It sounds like a spy movie, right? Well, today we're pulling back the curtain to separate imagination from reality. What I'm about to share will show you exactly how a legitimate currency revaluation, or RV, would unfold, step by step. And trust me, it's a lot less Hollywood and a lot more, well, boring. But knowing this is your best defense against misinformation. So, let's get started. Step 1. The official announcement. A real RV wouldn't start with a rumor on a forum or a cryptic email. It would begin with a formal public announcement from the country's central bank, like the Central Bank of Iraq or the State Bank of Vietnam. This announcement would be clear and direct, stating the reason for the change, the new official exchange rate, and the exact date and time it becomes effective. There would be zero leaks or secret insider confirmations before this happens. It's all about transparency. Step 2 is the global system update. The moment that announcement is made, financial systems worldwide spring into action. We're talking central banking networks, international settlement platforms, and government financial records. This isn't a slow manual process. The The new rate gets updated across the board within minutes or hours, not days. Every major bank, from New York to Tokyo, receives this update simultaneously. There's no head start for anyone. This brings us to step 3, the market and media reaction. A real RV of this scale would be impossible to hide. It would be the top story on every major financial news outlet. Think Reuters, Bloomberg, The Wall Street Journal. You'd see the International Monetary Fund and the World Bank issuing statements. Economists would be all over it, analyzing the impact. If you're not seeing this widespread, mainstream coverage, and the information is only on social media or private websites, that's a massive red flag. Real financial events leave a very public trail. Step 4 is how your local bank would handle it. Once their systems are updated with the new official rate, commercial banks would get to work. Their software would automatically adjust. They'd calculate their new spreads and fees. And then they would resume exchanges for the public. Nay, here's what's crucial. There would be no private appointments, no special VIP windows, no non-disclosure agreements, and definitely no secret notifications. Everyone, from a billionaire investor to you and me, would see and get the same official rate. That's how regulated banking works. So, when can you actually exchange your currency? That's step 5, public access. After all the systems are updated and stable, can customers start making transactions? But don't expect a free-for-all to prevent panic and market manipulation. Banks would likely impose temporary daily exchange limits. And of course, standard compliance and anti-money laundering checks would still be mandatory. This entire process is carefully structured to ensure stability and prevent fraud. Now, let's tackle the biggest myth of all. The idea of becoming an overnight millionaire. The reality is, a real RV is almost always a modest, controlled adjustment, not a massive 1000x jump. Governments are terrified of sudden, extreme currency appreciation because it can wreck their economy, would make their exports too expensive, trigger runaway inflation, and create massive social instability. Think about it, why would a country deliberately sabotage its own economic future? That's why historical reevaluations have always been about normalization and stability, not creating a lottery for foreign currency holders. Let's be crystal clear about what would not happen in a real RV shoe. You would not get a secret email from a bank manager. There would be no 72-hour window to cash in. The idea of a special contract rate is a complete myth, and there are no private redemption centers. If you hear any of these terms, you are not dealing with a legitimate financial event. These are hallmarks of scams, plain and simple. So, how can you know for sure if an RV is real? Just ask yourself these simple questions. Has the central bank officially announced it? Is it being reported by major financial news like Bloomberg or Reuters? Are the new rates updated and visible on global exchange platforms? Are commercial banks all showing the same public rate? If the answer to any of these is no, it's not real. It's just noise. The truth is, if a real revaluation ever happened, it would be a very public, structured, and honestly, a rather dull administrative process. Real global finance runs on procedures and public announcements, not on secrets and promises. Once you understand how the actual system works, all those sensational headlines and rumors lose their power. Tease. Thanks for watching. And remember, in the world of finance, if it sounds too good to be true, it always is. Stay informed, stay safe, and don't forget to subscribe for more nonsense financial insights.